So today we saw Tesla stock close up slightly higher than we did in last Friday's trading session, but in today's video there is a ton to go ahead and go over in regards to Tesla stock, the overall economy, and also the broader market. So make sure to watch this video in its entirety, especially if you want to gain a better understanding of what's currently going on. But before we go ahead and highlight some of the news for today, I want to highlight a trade idea I called out this morning at 9:25 a.m. before the markets opened, where I said that I'm going to be looking into shorting the shares or getting the 126/127 puts on Amazon once the price is greater than $131.85. Now, if we take a look at Amazon, we see that it was literally pennies away from our trade entry to go ahead and start shorting or getting those puts on Amazon stock, yielding a great day for today's trade idea. So if you want to have access to my daily briefings where I talk about what's going on with the overall economy in much more details, as well as access to my daily trade ideas, make sure to check out the first link in the description of this video, especially because we have a coupon code for the end of Q3, because that's right, we only have a few more days before the third quarter is officially over. Heading on to the news today, we saw that Ford pauses work on a $3.5 billion battery plant investment in Michigan. Now, there still hasn't been any clarity on why Ford is actually pausing on its big investment that it's trying to do. However, there's a lot of speculation that this may be tied to what's happening with the ongoing UAW strike. And so when that catalyst news came out, we saw that Tesla stock actually climbed up higher, closing into the end of the day, as it's evident that, of course, if the legacy automakers are having to pause on its plans to compete with Tesla, well, that means that they're less of a competitor for Tesla in the EV space. But now looking into some macro catalysts, we see that Moody, which is a huge credit rating agency, is threatening to go ahead and downgrade the United States credit rating if the United States government goes into a shutdown. Now, here's the thing. If the United States does indeed go into a shutdown, it wouldn't have a real huge impact on the global economy. However, Moody has said that this would show that the United States isn't really competent enough to really handle its business, which is why they're threatening to go ahead and downgrade our credit rating for the United States. And if the shutdown is longer than expected, well, they're threatening that they will lower it even more. And so if you're wondering how Moody's credit rating agency's downgrade could impact the overall equities market or stock market, how would it impact everything? Well, here's the thing. It would have a huge significance, because that would mean that the United States debt is less favorable as an investment. And so that means that bond prices would go down. Now, we know that bonds have this inverse relationship where when their prices go down, well, their yields go up. Now, here's the thing. A lot of lending is tied to a lot of these bonds. And so if we see yields go up, well, that means that interest rates are going to go up. And so that's just overall bad for the economy. But also what we see is that when these yields go up, investors are less likely to put their capital into stocks when it's risky. You don't know what the outcome is, versus putting it into these bonds that are now paying a higher premium for investing into it, where you have this guaranteed return. And so this could wreak havoc on the overall stock market if we end up seeing a downgrade from Moody. And so that downgrade could hold a lot of weight in what could happen to the stock market as we start entering into Q4. But with that said, I want us to go ahead and hop into my laptop so that we could take a closer look at Tesla stock, and also just cover a few more details as far as events that are coming up that could really shape what's going on with the overall economy. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and we did indeed see that the bulls came in today to the rescue, as we see this little wick right here on the candle just showing us that there was buying demand today for Tesla. But this doesn't necessarily mean that we are exactly in the clear, as I often have been pointing out that this is an area that's a bit concerning, because there's a lot of volume relative to price, and we're below that area. Now, when there's a lot of volume relative to price, that means that there's a lot of exchanging between buying and selling. And so this area could present itself as a resistance, or we may just get stuck in here as the stock consolidates and moves sideways. In fact, last time we were around this area, we saw Tesla stock pretty much consolidate, where it went up, it went down, it went up, it went down, it went up, it went down, until we had a catalyst event that actually pushed up higher, but then we saw Tesla stock get rejected by this descending trend line and come downwards. So we're definitely at a critical area for Tesla, and unless we have a really good catalyst event, it's not looking too well for Tesla. But I also want to point out to another macroeconomic event, or just some other data that we should definitely keep our eyes on for. For example, if we take a look right over here, we see that the market is actually pricing in that the Feds won't hike in their next meeting in November. Now, this is interesting because we recently last week saw the Fed update their stance on monetary policy, and we saw that a bunch of members of the FOMC are anticipating one more hike before the end of the year. And so this right here, this chart shows us that the futures market, or the market, is really calling the bluff on the Feds that they won't actually hike. And so that's pretty interesting because, hey, that is actually looking good. But we want to pay attention to some economic data that's coming out this week that will actually help us really solidify whether the Feds are actually bluffing or if they may be right about one additional hike. For example, let's go ahead and take a look at it. If we take a look at Friday, we see that we get the PCE, which is an inflationary gauge, just like the CPI report. In fact, this is a gauge that the Fed actually prefers to look at. And so one of the main things we want to pay attention to is the core PCE, right? Because the regular PCE will include those volatile items like food and oil. And we know that right now, headline CPI, or headline inflation, is going upwards because of, these volatile items such as energy. But if the core inflation actually trickles down more, well, that is good because that means that it's less likely that the Feds will hike one additional time. But if we see this tick upwards, well, then this may actually start changing and the market may stop calling the bluff on the Feds. And so this is, something that we want to pay attention to as the data rolls out. But we also get on Thursday Fed Chairman Jerome Powell of the Federal Reserve speaking at 4 p.m. So that's something we want to keep an eye out for because we want to see if he continues with a hawkish rhetoric or does he kind of switch over to a more dovish tone. But along with that, on Thursday, we also get the initial jobless claims, which comes out weekly. And this is going to give us an idea of where the labor market is, right, as something that we want to pay attention to. But here's a huge concern along with the government shutdown. See, one of the issues with the government shutdown is not only what it could do to interest rates, but just also the fact that if we do have a government shutdown, some of the economic data points that we want to pay attention to may not roll out. Why? Well, because if the government has a shutdown, only essential parts of the government are going to operate. And so the Bureau of Labor Statistics, they won't be able to put out labor data or we won't get any updates on economic data. And that means that the Federal Reserve, if we have a government shutdown, may have to navigate in the dark without getting any data. And that's a bit concerning. That's actually something that was asked around Jerome Powell in his press conference last week where they said, hey, if we have a government shutdown, what are you going to do? Are you going to be able to still see the data? And he said, no, they're going to have to navigate in the dark. And that's a bit concerning because if they do have to navigate without getting any data, well, they might be inclined to hiking. And so that's something we want to pay attention to. But I want us to also take a look at the 10-year Treasury, right? This has also been trending upwards. And I expect that if we do have a government shutdown, this could continue going up. And again, this is bad for equities because we saw equities, a lot of these stocks had an amazing first half of the year, which is something I told the Push and Profit Private Group that we were going to see in the first half of the year, but the second half of the year wasn't going to be too appealing. And so what we're seeing is with these rates really high for these 10-year Treasury yields, a lot of these institutional investors who made a killing with the big seven like Tesla, Microsoft, Apple, Nvidia, right? They made a killing. Well, now, while things are getting shaky, they have an opportunity to sell off on their stocks, which would cause stocks to go down, right? Selling pressure, and rotate the capital into these 10-year treasuries where they end the year off with a guaranteed 4.5%. I mean, if you go on Twitter, I follow a lot of fund managers, or sometimes I look at what they're doing, and a lot of them are just salivating at these high 10-year treasury numbers for the interest rate. And so a lot of them are saying, hey, I may just exit out of my position and just call it end of the year right here and take my guaranteed returns. It's a safe bet. And so this, again, is not good for the overall markets. Now, I want us to take a look not only at Tesla, but one of the things I also called out for the Push and Profit Private Group was to look at not only the S&P 500 Index ETF SPY, but look at RSP. Now, many may not know this, but RSP is a S&P 500 Index ETF, but equally weighted, right? Because when we look at the regular ticker symbol SPY, we have Apple that has a huge weighting, but here everything's equally weighted. And what we're seeing is that when you take a look at things from an equally weighted standpoint, it just broke down this trend over here. Now, typically, when we see this pattern over here, now I'm not someone that is favorable with trading against patterns. I think it's kind of ridiculous to only look at one data point. But technical analysis is something that you do want to keep an eye on sometimes. And we see that it just really broke down this area over here. And so this is a bit concerning because we could again see more selling pressure for the overall markets. This is a big, clear picture of what's going on, because when you look at the SPY, the regular S&P 500, you may not see things looking as bad because the big seven, like Apple, Nvidia, Microsoft, Facebook, etc., they're holding things up. Now we're seeing things shaky, but things have already been shaky for the overall markets. Things have been trending sideways for a while now, and so that's something we want to keep an eye out for. But let's go ahead and actually switch back to Tesla, right? So let's talk about a couple things. So oftentimes I do get perceived as like a Tesla bear, but that could be the furthest from the truth. I'm actually a Tesla bull. I've been investing in Tesla since 2017, and I indeed will continue investing into Tesla. Why? Well, it's not because there's a lot of zealotry on my end for Tesla, but it's just because I could clearly see the trend that EV vehicles are picking up. We also have government incentives pushing the idea for EVs. And also we're seeing that these legacy automakers, look, we just saw Ford having to pause on their plan to even build infrastructure to catch up to Tesla. So that means that Tesla is going to stay in the lead. And so yeah, Q3 may not be good. Q4 may not be good, but long term, 2025, 2030, I believe that Tesla is still in a very strong position. Now let's talk about Q3, right? So one of the things we want to be aware of is that, hey, the sales in China aren't looking good. I did a recent video explaining why we're probably seeing that. And we also know that Elon Musk mentioned in the previous earnings call that they would have to renovate some of their factories, which is going to stifle production. And so we won't really have an idea of how Q3 is looking until about a week from now or 2 weeks where we get the delivery numbers. That's going to be an indication of how things are actually going for Tesla for Q3. Now, of course, if we have a bad Q3, we could see Tesla fall down more. And so in my short-term trading account, I may take the opportunity to short Tesla to go ahead and hedge my long-term investment portfolio. I like trading Tesla in the short term in my trading account while it goes up and down, but I don't change anything from my long-term portfolio. When Tesla goes down and I see a bounce coming up, I go ahead and I add into my long-term portfolio. Very simple. I don't think that Tesla is going to be out of the EV space. I think they still have their lead, and they're going to continue dominating. And as they continue developing or producing, manufacturing more vehicles, they're actually becoming much more efficient and being able to reduce costs, which is going to hurt the legacy automakers even more trying to step in. And so right now, again, I'm very bullish on Tesla, although sometimes it may seem I'm bearish. Please keep in mind I am bullish on Tesla, but we'll have to wait and see what ends up happening. In the comment section below, though, I want you guys to let me know, what are your thoughts on a government shutdown? Do you think our politicians, our policymakers will be able to avoid a government shutdown, or do you think we will head into a government shutdown? And of course, that would be bad. But let me know in the comment section below. And with that said, guys, make sure to watch this next video right over here, where I talk about where or how to identify a confirmation of an uptrend. So definitely check out that video, and I'll see you guys on that next video. Take care, guys.